Hello and welcome to the Investing in Frontier Markets panel. Frontier markets provide access to some of the most dynamic and fastest growing economies in the world. Whether we're talking about the Middle East's oil reserves or Africa's natural resources or Asia's newly industrializing export industries, the one thing these frontier economies have in common are strong, sustainable growth drivers.
Without further ado, then I'd like to bring it back to the panel. I've got with me four very interesting characters, put it that way. Very impressive bios on your booklet, so I don't think it'd be fair to spend only 30 seconds on each, so I assume and I would hope that you would make sure that you take a look at all these bios. But from left to right, from my left to my right, we have Juan here, who will have a bit of a bias towards Latin America, and then I'll let him basically tell us his thoughts on the couple of issues we'll touch on.
Yeah, to continue, I agree with Bill. I mean, it's not that frontier markets are interesting in themselves. There is everything there. To add a bit the Latin American perspective, because that's where we invest as a company, you know, what we are looking for is places where the perceived risk is much, much lower than the real risk. And that's what's shifting over time. You know, you have in Latin America, Venezuela, Bolivia, Ecuador, Argentina. These are really troubled countries where it's difficult to invest. Maybe things are very cheap, but you don't know for how long you're going to own them. You don't know if you're going to make money or even be able to get your money out of those countries if you eventually exit some of those investments. There's some other aspects. For example, we focus a lot in Peru, in Uruguay, in Paraguay. These are frontier markets in the sense that capital markets are not very developed. These are not countries where you have heard a lot of foreign investors or institutional investors participating there. But where the political situation today is safe, you know, that's also the reason why so many people are interested, is that you look at the world today, it has changed. Maybe there's less political risk in Peru, in Uruguay, than in France or Italy, as we see what's going on there. So maybe that's where the safe investments can be done today, but at the same time it's growing more. And I think one key reason why to invest and focus in those countries is that it's less competitive. You know, you are looking for opportunities where there's more returns and more deals to be made than the investors chasing those things. So the way we look at Latin America is focus on areas that are growing, that are politically safe, and also from an environment and corporate governance point of view are changing. You know, there's new generations in all of these countries. I think over the last 20 years, the people doing business in Latin America coming into the different aspects of responsibility are different than 20 years ago. It's happening also in Africa or in Asia. So I think the opportunity is realizing that these places have changed, that they are safer, that there's a good investment returns to be made with less risk than is perceived by the market.
Thank you very much for that, because it's all nice by and large, particularly if you're a patient long-term investor. And you don't want to be in a kind of a hit-and-run type of seat, really. This is not for a hit-and-run type of story. It's more for long. At least us. We're not hedge fund managers, so we leave that to the traders. So what are the risks, really? So going back the other direction so that I keep everyone awake out there. So are there any risks at all? And what kind of risks are we talking about when we talk about frontier countries like Uruguay, Paraguay, Argentina, etc.?
Yeah, you know, we focus only in private equity, so we need to operate companies on the ground. And the reality, the operational reality of these companies is that they are most of the time not up to standards in terms of reporting. You know, when you acquire a stake in a company that is a $10, $20 million company in Peru, they rarely have an audit, they rarely have IFRS accounting, they rarely have processes and checks and balances. So you need to really do more due diligence before getting into something. You know, I think it's an area where passive, you know, investments from far away are difficult to control. So you need to really get involved into the companies. I think it's areas where, as there's less institutionality, personal relationships and human factors are more important too. I think getting to know the people operating these companies, getting to know the reality of really working and dealing on these countries on a daily basis is very important and critical, because that's where the risks are. The counterparty risk is not legal, it's really structural, and even from a relationship point of view, that's where if you lose the confidence of people, you may not have access to the information or to liquidity in your investment. So I think it's more hands-on that creates opportunity, but potentially a lot of problems, as you are less protected as an investor from an outside point of view.
I was wondering about corruption. Once investing into a different country, one of the biggest issues is political corruption in politics. When you invest, how would you go about protecting yourself against the corruption? Or would you rather play the actual game and actually take advantage of corruption?
It's a reality that many of these countries have a big corruption problem, both at political level, but also on corporate level. You know, it's not rare to want to do a business with a certain company and to have a certain employee asking for a bribe. So it depends a little bit how you organize as a business. We try to turn that into a competitive advantage in finding capital. If you want to capital from the big pension funds today, from big institutional investors, you will have to have very strict ways of dealing with this, and actually it's going to be a condition. Not only it's illegal today through a lot of legislation handling how you can do business in foreign countries for some investors, but it's also a requirement in most of the subscription forms that people sign today, for example, to invest. Or not having access to debt financing from big international institutions. So it's a reality, and I think it's the right strategy to try to embrace all this new corporate governance and be an actor for change in these countries if you can have an impact on how business is done there.
But can we just wrap up as far as where and how to invest?
As private equity investors, we try to focus on a longer-term horizon. So what we are asking ourselves is, what is the world going to need 10 years from now, and who is going to be willing to pay a big amount of money for that? And one of the areas we focus on is agriculture. You know, food security is going to be one of the main strategic topics of the next 10 years, and particularly for the countries that have the most funds to invest, China, Middle East. So Latin America supplies around 20% of the world exports of soft commodities. And it's a sector that almost doesn't have any organized company. You know, it's in the hand of just a few worldwide traders. So we are consolidating agriculture assets around Latin America. And you have to do it in the areas where, for example, you can buy land without foreign ownership restrictions and where the cost of production is relatively low. Once you control that, you will be able to sell food into the world market at higher and higher prices. So one of our biggest investments is land in Uruguay. It's 3 million people, produces food for 100 million people. So we'll be able there to sell food at higher prices to whoever needs it tomorrow. So it's just one idea and one macro trend we are working on.
It's been a great pleasure, and we thank you all for your interest, and thank you very much for the fellow panelists.